The market exhibited broad-based volatility last week. Precious metals experienced a rollercoaster ride of rebounding, plunging, and rebounding again, while crypto assets also saw some recovery following a sharp sell-off. Although fundamental uncertainties remain, the amplification of market volatility was driven more by the intense tug-of-war between bulls and bears. If geopolitical developments and economic data provide no new variables, market volatility is expected to begin subsiding this week. Regarding economic data, due to the brief U.S. government shutdown, the non-farm payrolls NFP report has been postponed to Wednesday, February 11, and will be released in the same week as the CPI data. A combination of weak employment and strong inflation would pose the greatest risk to the market. On the geopolitical front, President Trump has confirmed a new round of negotiations with Iran. Meanwhile, the U.S. military has taken the rare step of convening senior officials from 34 nations. As the complexity of geopolitical maneuvering rises further, attention should be paid to the reactions of oil prices and safe haven assets. The U.S. dollar maintained its rebound momentum last week. Although it pulled back toward the weekend, overall market fluctuations remained modest, with bulls currently holding above the critical 96.2-97.0 levels. Positive factors surrounding the new Fed chair are being gradually priced in by the market. From the perspective of core fundamentals and political economic factors, the underlying weakness of the dollar is unlikely to see a substantive change. It is anticipated that once the market adjustment is complete, there is a higher probability that the index will ultimately resume its downward trajectory. The 98.05-97.45 zone serves as a near-term resistance and a point of contention. Bulls must return above 99.00 to alleviate the prevailing pressure, while a weekly close below 96.00 would clearly signal a resumption of the downtrend. Spot gold staged a recovery last week after testing lower levels. Following a round of intense tug-of-war between bulls and bears, gold prices have returned to trade near the $5,000 mark. With a slight decline in volatility, gold prices are expected to engage in a range-bound struggle in the near term. Support at 4,400 remains very firm, while historical highs continue to present significant resistance. Near-term resistance levels are identified at 5,137 and 5,246, corresponding to Fibonacci retracement levels. On the downside, decent buying support is expected near 4,600. At this stage, appropriate attention can be paid to silver's performance. For gold, the overall strategy should focus on a sell high, buy low approach near the upper boundaries of the trading range. U.S. stocks showed divergent performance last week, with the SUPY staging a recovery after testing lower levels. The overall market trend remains firmly under the control of the bulls. It is worth noting that recent technology earnings reports and news developments have been less than ideal, which may lay an unfavorable groundwork for the medium to long-term trajectory. Despite this, the technical setup has yet to produce any clear signals of a market top or a reversal. For the index, the 6,720 and 6,520 levels both provide a degree of support, while the primary resistance remains the need to decisively reclaim and hold the 7,000 milestone. USD/JPY surged significantly last week, putting an end to its previous corrective phase. On the fundamental front, the landslide victory of Sanai Takaichi's ruling party may not be a favorable factor for the yen in the long run. Although the yen faces the risk of intervention, the overall fundamentals suggest that the outlook for USD/JPY remains predominantly bullish. Following the earlier breakout from a large triangle pattern, the 150-151 zone has transitioned into critical support. The market trend is unlikely to reverse unless these levels are breached. As the exchange rate trends upward again, reaching new historical highs is expected to be the long-term objective for the bulls. Prior to that, near-term resistance is identified around the 159.4160 level.